Welcome, Oliver Sloup of Blue Line Futures. Oliver, the markets have a lot of weakness here today, but we will be getting a new export inspections number at the top of the hour here. And then, of course, everybody's anticipating the new crop progress and condition report coming out today after the close. But do you really expect much in the way of a surprise there?
You know, I don't think the market's expecting too much in the way of surprise. We saw corn kind of grind towards the top end of the recent range last week, and I mean, honestly, if you look back at it, it was the highest close since the middle of April. So despite the pullback here to start the week, the chart remains fairly constructive so long as we can continue to defend support. That comes in 323 to 325. Now, we talked about it last week on your show about 330 kind of being the new spot. A few weeks ago, 320 was the magnet for the market. I think that new magnet is 330, especially with option expiration here this Friday. That tends to be where a lot of the open interest is for the puts and calls. So I think if we drop below 330, hold support near 323, 325, I think there's a decent buying opportunity. Friday's commitment to traders report showed that funds bought back just under 25,000 contracts. They're still net short about 277,000 contracts, which is a ginormous position for this time of year. So I wouldn't be surprised to see the market linger around 330 here. If we get past this week and can hold support, I think funds will be looking to cover more positions here in the coming weeks.
What would be your first clue that the commodity funds are willing to flip that position or at least get out of that heavily short position?
Well, that's the big question mark. And a lot of people, when they see a big net short position, like 277,000 contracts, they think, well, they all got to buy it back at once or they're going to flip long. I don't necessarily think that that's going to be the case this time around. I would just expect them to cover a bigger part of that position. If we can get to a net short 150,000 contracts, I think the funds will take that as a good sign and kind of reset from that point going forward. There don't seem to be a whole lot of weather concerns. This afternoon's crop progress report expected to show good to excellent conditions, unchanged from last week at about 71%. So I don't think they're going to be in a huge rush to cover everything and flip long. But I think they can cover 150,000 contracts here in the next month or so.
When you look at our wheat prices, we begin in Chicago, and let's bring up that July contract here. We're 3 higher now at 484 1/4. We had been lower earlier in the day. And in the Kansas City market now, you have the hard red winter wheat showing a gain of 4 cents on July, and the price now at 432 1/4. So we're about a nickel off of our earlier low of the day. The spring wheat right now has July now 1 1/4 lower at 523. But how patient are you willing to be when it comes to marketing the wheat out of the field this year?
Well, with the prices that we've seen here over the last couple of weeks, it's been tough. We've just been in a slow bleed lower, especially for the Chicago wheat contract, and we referred to it last week as a bit of a technical graveyard. We had a chance to hold a triple bottom support pocket, 491 3/4 to 494 1/4 for that July contract. We couldn't do that. That kind of opened the floodgates for a bit of a whoosh lower, and really wouldn't be surprised to see an eventual retest of those lows from last fall, 468 1/4. I believe that was last September. At that point, I think the market would be in deeply oversold condition. But I think if you drop another 10 cents or so, that would get it and maybe see a little bit of short covering from that point going forward.